Welcome back. It's time now to take a look at the top business stories. Trade volume within UAE free zones reaches over 353 billion dirhams in 2010. Competition between Etisalat and DO to rise. And Christine Lagarde gets British endorsement to run IMF. Let's look at the equity markets first. The UAE's bourses both fell 0.3% today. The DFM closed the session at 1,578 points. Arab Tech Holding lost 0.7%. Drake & Skull International dropped 0.9%, and Union Properties was down 1.4%. The Dubai financial market lost 0.8%, and cooling company Tabreed fell 0.7%. Stocks to gain were Dubai Islamic Bank and Dubai Investments, which both rose 0.5%. Dubai Islamic Insurance was up 1.6% and DO gained 0.9%. 157 million shares were traded, valued at 145 million dirhams. And over in the capital, the ADX dropped 0.3% to close at 2,646 points, with the financial services sector falling the most. First Gulf Bank, for instance, dropped 1.4%. Bank of Sharjah lost 2.5%, and Finance House was down 4%. And Waha Capital lost 1.4%. Suru Real Estate also ended the day in the red, down 2.2%, as did energy company TAQA, which fell 0.8%. Stocks to gain were National Marine Dredging Company, which rose 2%, and Actia Group, which rose 1.5%. 50 million shares were traded, valued at 81 million dirhams. And let's now take a look at the GCC markets, which ended mixed today. And now to our top stories. The trade volume of the UAE's free zone stood at 353 billion dirhams last year. That's a 23% year-on-year growth. Statistics released by the Federal Customs Authority showed that imports accounted for over 201 billion dirhams, while exports and re-exports contributed over 151 billion. The authority added that the data shows the importance of the zones for the economy and reflect the opportunities the business environment in the UAE offers. Phones tapped the list for both imports and exports into UAE free zones with a gross value of 24.5 billion dirhams, followed by oil, gold, data processing devices, diamonds and vehicles. Competition between the UAE's two telecom operators, DO and Etisalat, is set to grow, according to consultancy firm Arab Advisors Group. The Emirates telecom market is one of the least competitive in the region, as the two operators are the only ones in the country. Experts also said that since DO and Etisalat are both government-owned entities, the shareholders have common interests, and hence there is no aggressive competition. However, analysts say marketing initiatives and a plan to share broadband networks will increase competition, as well as changes in regulation. Equity markets in the MENA region hold a huge opportunity for investors, according to officials at Emirates NBD. The bank's equity strategists see the consumer, petrochemical and financial sectors as the most prosperous. This is off the back of increased government spending, funded by high oil prices and increased political stability, creating an attractive investment area. The MENA region is home to 60% of the world's oil and 40% of global gas reserves, and officials say there's usually a correlation between the equity market performance and rising oil prices. And in our fast financial news, Al Futtaim Group, which covers a range of market segments in the UAE, is looking to sign acquisitions worth more than 1.8 billion dirhams over the next couple of weeks. The company is currently expanding into Saudi Arabia and the Middle East and is now focusing on full ownership of businesses rather than minority stakes. Mubadala Development increased its stake in cooling company Tabreed to 26.1%, following the completion of a tender offer of shares to repay an Islamic bond due this month. In a statement released today, Tabreed said that it converted the Islamic trust certificates into over 415 million shares to repay a 1.7 billion dirham convertible Islamic bond, or sukuk. And after the break, we will run you through what's making the headlines in international business today.